Hey there, Michael Beres from OpenCorp, and I'm here with OpenCorp CEO, Matt Lewison. That's always great to see you.
Always good to see you.
Excellent. Well, in this episode, we're going to be talking about the housing crisis. We're hearing a lot in the media at the moment around housing crisis or rental crisis. So we'll unpack exactly what that means. But really, the key thing I'd love to hear from you is what are those kind of forward-looking insights that we've got? Because we hear so much talking retrospectively about what happened in history. Everyone wants to know, what does it mean for investors? So what is the housing crisis and what does it mean? How can we take advantage of it? How long will it take to be fixed and so on?
Yeah, I mean, in its simplest form, the housing crisis is an imbalance of supply and demand where demand is exceeding supply, and that plays out in the form of people, I guess, living on the streets, homelessness increasing. We're seeing tents popping up in city parks now where they didn't used to be. We're seeing people queuing up to get into rentals, so properties aren't available for very long before they're being snapped up. We're seeing rents rising at an exceptionally high pace, like 15 to 20% per annum, which is feeding through into the inflation rate as well. But I think the core thing is that there's an undersupply of housing, and it's not something that's being fixed really quickly. So that's the crisis, and that's what we're reading about in the paper and we're seeing on the news. And it's a really serious issue because of the social implications of homelessness or of people not being able to make ends meet because their rents are rising so quickly.
So you come from a property development background, pre-OpenCorp. So we've got a supply and demand issue here. Why can't we just make some more land available and fix supply? Can you take everyone through that kind of forward-looking insight on what's required, timeframes and challenges?
It seems really simple, doesn't it? And I guess in a lot of areas, like if you were producing cars, if you've got a gigafactory like Elon Musk and your sales go up, you start to produce more cars to meet that demand. When you're talking about property, there's so many layers to it because you've got planning. So while the federal government might say, we want more people in Australia because we need to deal with kind of generational change and demographical change, and we need to rebalance the different age groups, and the only way to do that is to bring people in. If we can bring in skilled labour, we can address labour shortages in certain industries. So you've got a federal government driving increased demand through population growth. You've got state governments who play ball with that a little bit, and they set housing policy largely, but then you've got local governments that set the planning scheme. So local governments decide on rezoning and on new development applications. So at the planning side of things, which is the very front end of producing new supply. So let's talk about like Elon Musk's bringing out a new Tesla. Well, it has to be designed first, but Elon Musk doesn't need to go to the local government to ask for approval. So that's one of the complexities of the property market or development space. So it slows down development, and obviously there's a lot of what we call NIMBYism, not in my backyard, where people don't want development. So we see planning decisions by local governments actually going against what the state and federal government wants. So we can't get enough developments approved to start with. Then you need to deliver the development, and whether that's a land subdivision or apartment, there's a construction team you need. And if it's land, then you also need to sell the land and then find somebody to have a builder produce it. So it's quite a complex supply chain, and there's so many moving parts, so many different trades involved in this. But the key thing is that, and it's probably the simplest way to describe it, that even if you took all those things off the table in terms of the planning complexities, there's a huge workforce for the construction industry. Over 1 million people in Australia work in the construction industry. The housing construction industry and the commercial construction industries are pretty much two of the biggest industries in Australia. If you've got, let's say it's 1 million even, you've got 1 million people working in the industry and you double the number of sales, you don't double how many homes you can produce without doubling the size of that workforce. And this is where there's that real lag. It's called an inelastic labour supply. And it's inelastic because it doesn't expand and contract really easily. To have a skilled labourer, you need somebody to go through trade school. You've got years of apprenticeship. You've obviously got probably a 3 to 5 year time frame for skilled labour, and unskilled labour you can bring in if there's capacity. But ultimately, we see the labour force in the housing market stay reasonably stable. And through historical periods where there's been an increase in supply, increase in demand, we might see more land sales, but we generally don't see more housing completions. It stays flat. So obviously housing starts might go up, but if completions don't increase because your labour force hasn't changed, what really changes is the length of time to produce a dwelling. And right now we're seeing that right across Australia, where the length of time to produce a dwelling has gone up because housing starts lifted as a response to this housing crisis, but we don't see any increase in housing completions. So in that regard, it's going to take a lot of time to actually catch up to where we are. And the only way to really overcome it is fix the planning system, which has been broken for a long time, and grow the labour market or labour supply for the housing industry, for civil construction, commercial construction and housing construction. And as much as the government is focused on that immigration piece, it takes time to bring people into the country, and we're not bringing in people who are purely just coming in to work on houses. They're coming into nursing jobs or like other areas of the economy. So it's a very slow burn, and this is why I guess Australia goes through those cycles in the market where we call it the development activity chain. When the market shifts into a phase where demand exceeds supply, it takes a year to 2 years before the market can start turning the cogs to speed up its construction. And then it's got another 2 years to actually produce enough dwellings to catch up. So it's about a 4-year window. And we're looking at this, which started, we were looking at it last year, but it's hit the media this year, and it's getting everyone's attention. But it's going to take 3 to 4 years to really turn that ship around.
I think that's the real takeaway message for investors, isn't it? Because the supply and demand dynamic is what drives growth, both rental growth and capital growth. It's clearly not an easy fix, as you've articulated. The number one thing holding people back right now is interest rates and the perception of how high they might go. But then fundamentally, if we take what you're saying, the interest rates rises have stopped or pretty close to. These fundamentals in the market will mean significant rental growth and capital growth for the next 3 to 5 years. And that's assuming we start fixing the problem today, which is highly unlikely. The one other thing we were talking about just last week that I thought might be really interesting for people, you went to a presentation recently where the guest speaker was asked around the accord of basically bringing housing construction back to pre-COVID levels. Can you just give everyone a summary of what that was and basically his reaction, which is fundamental understanding for investors out there today?
Yeah, so he's a very senior person at the National Housing and Finance Investment Corporation. I won't name him and throw him under the bus, but through his presentation, obviously looking at the supply and demand across Australia's major cities, and their reports show quite clearly that for the next 4 to 5 years, each of our cities is going to be building less homes than their annual demand. So the deficit is going to get worse for the next 4 to 5 years. And when asked about, I guess, the response to the federal government's housing accord, it was quite a flippant response to say that it's practically impossible because of the different levels of government that need to become aligned, the finance and demand and where the capital needs to be allocated, and then the size of the industry. So to paraphrase, I think it was said generally it's impossible, was kind of the sense that we got. And we've previously produced 1 million homes in a 4-year period in Australia. But Australia's labour force shrunk between 2017 and 2020. The housing labour force shrunk because of changes that APRA made to housing finance, which meant there were fewer off the plan sales. Obviously the number of new homes getting constructed was shrinking, so the labour force kept shrinking. So we have a smaller labour force for housing today than we did 5 years ago. So it's not like we can quickly just turn that back on and start producing the same number of houses. So yeah, it's incredibly complex, and you really feel for the people who are really doing it tough, and that's the renters and the tenants. Again, it's one of those things where the RBA, in trying to overcome inflation, and keep in mind rental growth is the second biggest item in the inflation basket. So when rents go up, the RBA says high inflation. the RBA's response to high inflation is to put interest rates up. Putting interest rates up reduces the number of new homes that get built, which means that rents go up faster, and it becomes a self-fulfilling prophecy. So hopefully we are at the end of that interest rate rising cycle, because it has a direct impact on rents, and it flows through to tenants paying a lot more and creating more housing stress for those tenants. Obviously as I said, the only way to really overcome it in a large sense is to make huge policy changes and to grow that workforce. But the really positive thing is, for an investor, obviously we can help to address that shortage of housing by producing new houses for the market. But we're also getting into the market at a period of time when we're starting to see 1% growth per month again, because it's being driven by people trying to get out of that rental market, and that becomes again a driver of market sentiment. So we're likely to see that being reinforced. When there's 1% per month capital growth, you obviously don't want to be out of the market for too long, because a year of that's 12%, and that's
you can't save that quickly.
Absolutely.
Yeah. Well, fantastic insights as always, Matt. Obviously, supply and demand is a fairly basic dynamic that drives rental growth and capital growth in housing markets, but the underlying factors around the housing crisis are not easily fixed. They're here to stay, at least for the short to medium term. Hope that's helped you with the investments. We'll see you next time.